Hey everyone, so today we're gonna just quickly review the trading waves and how to become a profitable trader from these types of market trends. And we're likely gonna go over ratio as well because ratio is important. In order to, at the end of the week or at the end of the day, be a consistent profitable trader, you have to have a really good risk to reward. So I'm gonna start sharing my screen and then we'll find like one or two setups so that you guys have a better idea on what or better understanding on what to look for when it comes to you viewing the market on a weekly basis. So this is how you find your setups. I'll find a pair, find maybe one or two setups, and the setups I'll find it'll be on the 4 hour time frame because I know most day traders are on YouTube and it could probably turn out into a swing trade, but if it's like a day trade, if you're a day trader, you're probably looking for something to profit from within about like less than a week, which would be about like 1 or 2 days. If you're a swing trader, then it's most likely 3 days plus, as long as it doesn't overlap 12 months, then you wouldn't be considered an investor. So let's see if you what happens on the 4 hour time frame on a smaller time frame is typically on the 15-minute time frame. So let's say if the market was right here, this is the NZD CAD. So if we're viewing this pair and this closes, as you can see, this is a high, then this is a low. As this is only a low if this candle closes right here. And then if we play it out, see the candle closed. So now we're waiting for a retracement back into this 4 hour structure. And this is this area, somewhere in this frame right here, or range, because this is a range. Somewhere in this range, we're looking for a market structure shift on the 15-minute time frame, and then we're looking to push price up. So this is pretty much a correction. So if we drop down to the 15-minute time frame, we can see on the 15-minute time frame, I'll add that this is a 4 hour low and that since price did close above this structure point, this is the 4 hour high, 4 hour high. Next, as you can see, what's making the 4 hour time frame is the 15-minute. And on the 15-minute time frame, we can see that this is the 15-minute high, this is the 15-minute low, this is the 15-minute high. So if price breaks below this point right here, that means we're getting a market structure shift, which means that we're getting a pullback or correction into this zone or range. And then if price does a market structure shift here on the 15-minute, then we're gonna look to catch the buy. So next, let's see what price does, if it shifts or not. So as you can see, price does a market structure shift. And then we wait for price to get maybe filled on the 15-minute time frame. You can see there's some imbalance here, and then there's also some imbalance here. But as you can see on the 15-minute time frame, prices already came into this range and it came into about 50% already. So if you see that price comes into at least 50% and then presents a market structure shift on that lower time frame, what happens next is you're looking for an entry point. And as long as it's going to give you at least a 1 to 2, you should probably take it. So I'll show you guys how I would take a trade like this. I would set my alert to 50% of this range right here. So I would take the fib, put it from here, set my alert around here, or even a daily area of interest that you see, or an imbalance that you've spotted, maybe on the 15-minute time frame. And then now we're looking for a market structure shift. So once price goes below here, you can see that there was a 15-minute, a pullback on the 15-minute time frame here. Then price closes, closes, closes. Now this is the low. This is the 15-minute range. So I'm going to slow this down. Okay, so price close here. So this is the new high. This is the new low. And it looks like it's pulling back towards this imbalance right here is what it looks like. Um, I'm not sure. I didn't trade this. I don't know what happened, but I'm just guessing that that's where price is going, but price can also do other things. Okay, so now this is the new high, this is the new low, and price did come into that imbalance. Now we're pretty much waiting for price to close above this high. If it doesn't close below this high and it closes below this low, then that means we're still in a downtrend. Okay, so price closed above this high, and since price closed above this high, and this is London session. So during London session, I would make sure that this is a 1 to 3. As soon as this price close, I would make sure that this is a 1 to 2 at least. See, this is a 1 to 2, and then I would enter. So as soon as, I don't know if this is gonna hit, but it's a part of your law of probability. So if it doesn't hit, I'm okay with that. And as you can see, it looks like, see what happens. Hopefully price doesn't come back. But yeah, you're staying in this trade. Looks like price came back. All right, well, price took us out. Next, we're looking for another 15-minute. So we lost that one. We're looking for another 15-minute market structure shift since we're still below that area. As long as we don't um take out price, take out this low, then we're good. As long as the 4-hour candle does not close below that low, then we're good. We're still bullish. We just lost one time, and we're waiting for another 15-minute structure. So as long as, if this was a low right here, so this is a low, this was a high, then this was a low. And because price, if price closes, if this candle closes bullish right here, above this area right here, then that means we can take this for a buy and re-enter. So I'm gonna play this, and perfect. So price did close there. Next, I'm gonna take this, and we're gonna enter right there, stop loss below that low, and then we're gonna target the same exact location, which is that high. So now you can see this is a 1 to 3. And if price goes in our favor this time, then that would mean we're, let's say, let's just see what happens. And what session is this? Okay, this is a New York session. price touch it or no? It's right. It's sitting right beneath the TP. Okay. So price hit TP, and what this scenario means is we've done a, let's say we have $1,000 account. $1,000 account is what we started off with. And then we took a 1 to, what was this? This is a 1 to 2 at first. And we risk, let's say we risk 5%. So if we're risking 5% on a $1,000 account, we're risking $50. So on this trade right here, we lost $50. So I'm gonna type negative $50 on this trade since we're risking 5% on a $1,000 account, which means if we did win, then we would have been up $100 and the account would have been $1,100. Um, but since we won this trade right here, then this would mean since this is a 1 to 3, then that would mean we've gained the $50 back plus an additional $100 since it's a 1 to 3. So instead of the account being negative 50, instead of the account being short $50, leaving us at $950, we're in fact going to go from 950 to 100 and or $1,100. So now we're up $100. And then once you consistently keep um this is how you scale your trading account because you want to focus more on the process, which would be the risk to reward rather than the profits. Because with the law of probabilities, there's no there's no way that you'd have to pretty much fail 20 times in a row in order to blow your account by risking 5%. So that's personally the reason why I take these 5%. Um, risk 5% on my trades, but you don't have to risk 5%. You can risk 1, 2%, 0.25%, 0.5%. Um, but yeah, on live account, I'm risking 5%. Prop firm probably risk about 0.5% or 0.25%. But yeah, as long as you take into consideration these risk to rewards, then and keep a consistent strategy foundation in place for yourself, even if you lose, um, and the trade hits your stop loss, you should, in the end, still sustain profitability long term. So I hope this helps. I can show you guys another one. Take out any pair right here. Let's say we did AUD JPY and we went on the 4 hour time frame and let's say we went, is this a candle closure? This is a candle closure. So there's a 4 hour candle closure right here. If I select for price to be here, you can see this is a low. So this is a 4 hour low. Since this is a 4 hour low, you're gonna want to zoom in on the 15-minute time frame. And then if we looked for like imbalance, you can see that there's imbalance around here on the 15-minute time frame. There is imbalance on the 15-minute time frame here. And there's also 15-minute imbalance right here. Also here. So if price comes into this area of interest with these 15-minute imbalances, you're going to want to see a 15-minute market structure shift. We've already seen a 15-minute market structure shift to turn from bearish to bullish. So from bearish to bullish, you can see that price came from here, dropped down, here, dropped down, here, dropped down, and then this is the market structure shift. So now we're waiting for price to do another market structure shift. And if it climbs up here, doesn't mark a shift, you're looking to take the sell into this area right here, as long as it gives us at least a 1 to 2. So again, I don't know how this is going to play out based on the 15-minute time frame. So I'm not sure if it will give us a 1 to 2. If it doesn't give us a 1 to 2, I'll look into a different pair that will. Um, because if it doesn't give us a 1 to 2, then I wouldn't even consider this trade. So I'm gonna click play and we're gonna see what happens. Okay, so market tapped into area of interest, area of interest again. Okay, so this is the two areas of interest that prices came into. Now we zoom in and we see that price is still bullish. Okay, price is still bullish. Well, this does not. The only way that price would give us a 1 to 2, because price did do a market structure shift here. If you can see closely, this was the high, this was the low, this was the high, this was the low. So this was the market structure shift on this level, which means in order for us to get a 1 to 2, at least a 1 to 2, then this would be our stop loss. This would be our take profit. And then we would have to set not alert. So you can set what is it? Not a sell stop. It'll be one of those sell positions that where it automatically puts you in. I forgot what it's called. But if you put a sell position right here for when price to come back, it'll trigger you in and then you can keep your stop loss here. So you can pretty much automate this if it happens. If it doesn't happen, then, and it doesn't get to the price of 96,670, then you just miss out on the trade and then we look for a different trade. If it does take you in, then price shouldn't come back to the 15-minute high and it should just bring you down to this target, which is going to be your take profit, giving you a 1 to 2. So I'm going to play and see what happens. Okay, price got us in. Now let's see if price gives us a 1 to 2. Okay, perfect. So price came to our take profit. So this is a W, and that means we're up $100 again. And now if we look back at the NZD CAD, where is it? I don't even know where it went, but we did have, oh, here it is. Okay. So with our account, based on our last trade that we took, the account was at 1100. So now if we go back to AUDJPY and we do the math, it's basic math. It's going to be um what we finished off at before, which was 1100 plus, since it's a 1 to 2 and we risk 5%, then that means we're going to be up um 100 or 1200. So now we're up 1200 and now our account's equity is at $1200. So this is how you scale your account. Not too much exposure. If you're trading live, about 5%, I think is reasonable. Personally for me, it seems reasonable. And the risk to reward, I wouldn't really go for the one-to-ones because you got to take into account that anything can happen and you don't control the markets at the end of the day, no matter how much of a win rate you think you have, how good of a win rate you think you have. One-to-ones really don't make sense. Um, it's just not worth it when you trade or look for one-to-ones. And if you're gonna see a setup and it's not giving you at least a 1 to 2 at that like point of you looking into the market, then just set your a pending order. This is what I meant. Set a sell pending order at the price that at least gives you a 1 to 2, so that when it comes back, you're in for the 1 to 2. Don't just enter when it's below giving you 1 to 1. This has been one of my strategies that I've been using and it's been working for me. So I'm just sharing it with you guys so that you guys have ideas of, how to take advantage of the market going forward. So that your bias is in favor, um, without, while still considering your stop loss and your take profit, giving you a good risk to reward. So I hope this helps, and like, comment, subscribe. If you guys have any questions, comment, and I hope you guys enjoyed this video.